market is up today. It's nice to be on an up day talking versus a down day like we usually have been lately. But yeah, I guess the Fed changed their Bullard, I think it was on Friday at some conference, talked about how they have to discuss the rate of increases to not like damage the economy or something. So normally in normal times, earnings reports drives the market.
The market's been hit so hard that I think if we do have a couple solid reports, like we saw this morning, that could spark the rally. But I'm hesitant to put too much stock into that just because we've seen companies beat in recently and the stock's fallen.
Then the other thing is China, right? Last night I saw some headlines that China's state, the Chinese government was ordering state banks to buy stocks to prevent the decline, and the Chinese state media was like, there was no reporting of the massive 10% drop the previous day in the state media, and it's just it's a different world over there.
Yeah, the weirdest thing I think though recently was the delay of the Q3 GDP numbers. It seems like we're kind of increasingly in a world where these economic metrics are being used for political purposes. Yeah. I don't know enough to say definitively that China did monkey with anything, but it just doesn't smell right to me.
Tying this in actually to Tesla, the Chinese demand pocket that we've seen, and now Tesla China lowered prices. The second most important person in China politics right now, the person who came out behind President Xi on the red carpet, is the guy that I think the mayor or the governor of Shanghai. And that's where Tesla's factories are. Maybe there's a reason they waited until right after the Congress, because they have such strong ties with Shanghai, and they have to keep that, and President Xi and all of China's government, CCP, in order to have Tesla thrive there. Tesla, the biggest thing is Q3 earnings came out, sort of a mixed bag, like you said. That's how we thought about it.
By far, the two biggest factors were the lower ASP. So average sale price actually decreased quarter over quarter.
And we thought it was going to increase, right? We thought
it would increase. That was a surprise across the board. And then the other really surprising thing to me was that the cost of goods sold increased so much as well. The shares outstanding was a little bit lower than I'd been expecting. So as Tesla, and that accounts for 3 cents of outperformance versus our budget. So you add all those different variances up and you get to $1.05 versus the 132. As Tesla has continued the stock-based compensation program and Elon's CEO performance award, the shares outstanding have really increased, pretty significantly each quarter. But that rate of increase seems to have drastically slowed down. Which is a really good thing because that limits dilution. Generally speaking, it looks to me what the strategy is here is that both companies have kind of like a non-cash transaction going on here. Chewy obviously gets free equity essentially in Lemonade, and Lemonade is trying to essentially get free, customer acquisition costs or customer acquisitions.
I like the partnership potential here. Chewy is a much bigger company now. They're incentivized with Lemonade to make Lemonade successful, because then Chewy gets 5% of everything else Lemonade's successful at too, like car insurance, which is the big thing we're thinking about. There's a lot more upside potential than the downside to me.
I think they'll do it. You got to think about the opportunity cost of this cash just sitting on your balance sheet. If they don't do a stock buyback, I'd rather they, at least buy treasuries or something that's like yielding 4%.
I think they're doing the right thing in terms of controlling how much capital they spend on new endeavors.
If you believe that Tesla's going to be the largest company in the world, and I certainly do, then you just say, okay, at what point does that happen? And so what's the kind of compound return, the compound annual growth rate? And I would seem to me that that value accrual is going to be a lot more meaningful than just holding your shares in cash.
I'm not so sure they're going to actually sell a $25,000 consumer car ever, to be honest. I'm not sure yet. I know there's people are interpreting the comments that way from the earnings call, but I'm not interpreting it that way yet.